in Kenya, where the Capital Markets Authority recently released its first quarter 2021 report showing that Nairobi Securities Exchange recorded a 20.88% increase in market capitalization to 2.43 trillion shillings from 2.01 trillion shillings recorded in the first quarter of 2020. Let's talk more about this with George Bodo, the Chief Executive Officer at Core Street Research and Analytics. Good afternoon, Mr. Bodo. Thank you very much for joining us. It's great talking to you.
Good afternoon.
Now, the market capitalization on the NSE recorded a 4.29% increase that was in first quarter of 2021 from what was recorded in the fourth quarter of 2020. What would you say were the major factors that drove this rise?
There was a general increase in prices in the first quarter of the year. And if you can look at, for instance, the Nairobi Securities All Share Index, it was up about 2% in the quarter. And this is a summation of all the companies that are listed and form the market capitalization. So you could see that while the All Share Index was up 2%, it triggered that 4% up growth in market cap. Because also during the quarter we didn't have any listing during the quarter. However, the Nairobi Securities 20 Share Index, which is probably like an index of the 20 more blue chip stocks, was down actually on the contrary. And this is because a number of the banking counters which form on the back of the index was still recorded a negative performance in the quarter. While the biggest component of the index, Safaricom, was up 6%, the banks were down. So this is why the index, well, overall the prices were up, but the blue chips were still underperforming during the quarter.
But how much of foreign investors and domestic investors would you say were in the market in the quarter on the review? For them, what was the major attraction there?
Foreign participation was fairly stable at 60%. It averaged about 62-63% in 2020. In Q1 20, it was about 65%. So it was about 61%. And this quarter, it was 60%. So there was a bit of stability. Of course, 2019, it was about 65%. So there was a bit compared when you look at 2019, the pre-pandemic, it's a bit down 400 basis points. But overall, the participation was very stable. But however, I need to point that they were largely net sellers especially on the four main counters they love, which is Safaricom, East African Breweries, Equity Bank, and KCB. They were largely net sellers on those four counters.
Yeah, in every market, a lot of investors look out for the banking stocks. How would you say that the banking sector actually performed in that market in the quarter under review?
The banking stocks, as I said, underperformed. I think during the quarter, the average return was about almost 1% on average, which is because, of course, banks are going through a rough time and investors continue to discount banks on this basis. If you look at, for instance, the 2020 results, net earnings for the sector was almost down 20% year on year. Return on equity was almost below 15% across most of the big banks. You look at 20% in 2019. Quality of loan books significantly deteriorated. So investors have continued to discount banks, and I think they're likely to continue discounting banks this year on the basis of the fact that most of their problems have not gone away.
So what is your outlook for the market in the second quarter of 2021 and, of course, the rest of the year?
Yeah, so I think for the second quarter, the market is likely to post marginal gains on the back of, I still see about 2 to 4% performance in the Q quarter because nothing much has changed across board. The economy is still frozen. Most parts of the economy are still frozen. Foreign investor participation is still, I'm still seeing at 60%. There's likely to be less volatility, as a continuation of less volatility into Q2 from Q1. But the thing is that there's no major news to excite the market. There's no IPO coming up. there's no secondary listing coming up to excite the market. So I think I'm still likely to see what I call a business as usual performance for the market in Q2 and even for the rest of the year.
All right, thank you very much, Mr. Bodo, for your time on the program today.
Thank you.